BMGM, welcome back to Galaxy Grid. I'm Lucas Chayan, joined today by Alex Thorne, Zach Picorni, and Will Owens. Before we begin, please refer to the link to the disclaimer in the show notes and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. All right. Hello, everyone. How we doing? Can everyone hear me clearly? We are having some audio issues. This is recording number 20 or so.
You sound good. You sound good.
Excellent.
And not even like substantially affected by the toxic wildfire downpour in New York this weekend. You look good.
Yes, exactly. Thank you. Yeah, we had some good acid rain. For those of you who have lived in China before, it's a common occurrence. It's very healthy for you. It helps cleanse the system. We also had some wild World Cup. The World Cup game reminded me actually of the Super Bowl, to be honest. Like, it was very clear who was going to win.
It was very one-sided. I mean, like, you'd like to see, I think, like Spain win like 3-2 instead of 1-0, but the better team for sure won. So
Yeah.
that the outcome was great. Dude, the Spaniards, apparently there's a bajillion of them in New York. Every single like Spanish tapas restaurant, or like I even saw like a sandwich shop that's like Spanish, just like hundreds of Spaniards mobbing them and partying all night last night. It's pretty funny and awesome.
I mean, it's kind of sad the World Cup's over, but now we have the NFL season to look forward to. Tennis is coming in full swing. It's good sports season still. A little lull. But crypto markets never sleep. I think, let's quickly dive into the market before we get onto our topics today. I mean, I think the big news obviously this morning was strategy update per usual. They sold another 263 million of MSTR. They've got the reserves now at about 3.2 billion. They once again did not buy any BTC. So continue to firm up the balance sheet, kind of allay any concerns over potential issues for their digital asset credit strategy. I think the big thing is it's looking better on that front, but we've clearly removed a substantial buyer from the market. Although Bitcoin has continued to hold up all right? I think Bitcoin last week, it broke 65K at one point, largely off a lot of the inflation news, and then retraced some as kind of Iran war came back into focus. The other major is ETH, which is starting to perform pretty solid as well. Up, almost 4% last week. ETH BTCs continue to climb higher. ETH hasn't yet cleared 2K. Who knows if we'll see that? But they've kind of got the opposite going on in terms of their DAT side, right? They've got, Bitmine continues to buy ETH. Bitmine actually bought back some of their own shares last week. And then just some more interest in it in terms of Robinhood chain catalyzing interest in the L2 side of things. Some, focus on Clarity maybe coming into play. And Alex is going to talk about that in a little bit. And actually, this is one thing that really struck out to me. ETH ETF flows last week were more than Bitcoin ETF flows, which is a very rare occurrence. So some momentum there. I mean, Alex, maybe real quick to you. We haven't had you on in a little bit. Like, any thoughts on the market here? How are you feeling?
Yeah, we are over 65K right now as we record at 65,420.
Let's go.
So, I still, from Bitcoin side first, like 65 does start to feel like maybe there's a slightly different regime emerging, but pretty much until now, or even maybe not even quite yet, like, 63.5, like to me, that's like 58, like that's noise. It's not a meaningful bounce off that 58K bottom unless we go a bit higher. So we've really just been kind of indecisively ranging. And I feel, there is some positive to that. Like we are continuing to establish a pretty strong base, in the low 60s, right? It doesn't feel like Bitcoin price wants to go much lower than that, right? So maybe, everybody debates like where the bottom is, and, we've put out content about that. And, I think you might look back and find that the 58 area was the bottom, right? So we're getting like sort of more durable down at these levels and building some resilience. And, I'm use any like, a synonym that I want for this. It's building a tougher foundation here. I haven't quite felt that the rally we've seen from 60 to 65 is like that notable. But you have seen big declines in like long-term dormant whale movements. We are like seeing some signs that some of the pressure is maybe abated, and now it's sort of just like rudderless, lacking a clear catalyst, I think, is sort of where we find ourselves. But yeah, I would say ETH's performance has been good. It almost feels to me like, there's all those debates about like Tom Lee was saying like, oh, stable coins will be on ETH and like that's why ETH should go up, and like it wasn't true. And then like we've also disputed whether that's even why ETH has gone up in the past.
Yeah.
But it kind of feels like maybe the market is sort of like they've gotten out all that neurotic overthinking, and now they're kind of just like, oh, but like ETH is like still like the number one general purpose blockchain. Like maybe we should just long it,
Incredibly neutral settlement layer.
Yeah, like you've already kind of like just sort of exhausted all the like over academic, overly technical arguments, and now you're just like, maybe I meant to just long this. I feel like that's kind of the because I'm not hearing a lot of like sophisticated theses about why people want to long ETH right now, and they do. Like we are seeing demand for it. To me, it's like you've got whatever the SEC is going to be putting out on the innovation exemption and maybe Reg Crypto. That's fundamentally probably supportive to activity on the Ethereum blockchain. And then you've got Clarity, which I think also substantially is a tailwind for Ethereum if it occurs. And then you just have like so many years of negativity, like how much people were so negative on ETH for like at least like 2 years.
Yeah.
And maybe that's just like, it's not even that they gave up being negative. It's kind of like, it's just like not cool to, it's not like, it's not the in thing to like constantly still be upset with ETH. It came down a lot, like that's kind of just my non-scientific view of Bitcoin and ETH.
Yeah, it's like we've run out of negative catalysts. I say that fingers crossed for ETH. I think. I mean, although I was thinking like maybe Robinhood Chain is like the Trump coin for L2s. Like, does it get better than Robinhood launching an L2? On chain.
That's funny. I
and
heard that.
I was also, we saw another ETH like ancillary organization pop up last week, ETH Systems, and this one's actually a for-profit, and they're going to be focusing on like helping building out tooling for institutions to use ETH. So we've written a lot about this. If you're interested in understanding what's happening at the technical and kind of the ecosystem level, I encourage you to go check out our work, because there's definitely have been a lot of shifts that have been playing out over the past 6 months that are largely being ignored because of the sentiment. And Will, anything standing out to you on the altcoin front?
Yeah, I mean, I guess I don't know. I was listening to Bimnet talking on Alex's podcast. I feel like the way Alex kind of framed, or the way Bimnet kind of framed it, was pretty smart. Just talking about like seller exhaustion. Like I talked to people who kind of bought like 6 months ago into crypto, right? They're like, oh, I'm looking to get some crypto exposure. Like they're not going to be like sellers at these levels. So I think, I don't know, that's like, relatively like encouraging, I guess. Pump token, have you been seeing that, Lucas? It's kind
30%.
Yeah.
Quite a move right after this big unlock.
Yeah. So I don't know. That'll definitely be something to watch. But yeah, it was funny because I was at the Hyperliquid conference and Hype was like nuking like the entire day. And I mean, you were spamming me like, this based on price action, this conference is pretty bearish. So
that's just like welcome, feet to the fire, out of the frying pan into the fire. Bitcoin has crashed at like every Bitcoin conference
I know.
I've ever attended.
No, it's funny because we were talking about that too when we were in Vegas. But yeah.
No, it's just what happens. I mean, I think like we are seeing interesting alt moves, and it is an interesting dynamic because normally when ETH starts to move, it frees like the air for altcoins to have much bigger moves. But a lot of the alt stuff has been trading all right without ETH, and so now I guess we'll have to see if it gives it kind of much more of a tailwind. Yeah, Pump was up a lot. Lido, they've kind of pivoted to the AI side. They're doing very well. And we've got a lot of alt-specific catalysts coming up in the next month. Arrow, ETH mainnet integration. Zcash is doing their Ironwood update. EtherFi founder has been teasing some really big announcement coming up in the next few weeks. So largely what we've seen is there's been big buildups to these events, and then there's been sell-offs. It's always been sell the news. So for me, a big signal will be kind of like when that dichotomy switches. I think the only other thing on the market side is, we saw the Ostium hack last week. Zach, you have any thoughts on Ostium and what happened there?
Yeah, I mean, it's kind of much of the same story as some of the previous hacks with like Drift and KelpDAO's RSETH. It was just a key compromise that allowed somebody to essentially set artificial prices that gave them profit they never had. So it's just like another story of smart contracts and the logic that they contain holding up. and like the human trust element and all of the infrastructure built up around the smart contracts kind of failing, which was like pretty similar with Drift, with like the social engineering key compromise and the use of durable nonces to sign a transaction well before the hack. And then something similar with the saturated RPC on Kelp DAO. So like that's still like a big outlying question, I think, for DeFi is, can we harden up the human trust element now that things like AI and smart contracts are robust enough? It's going to take time though, because there's a big human element to all of this, and teams need to get trained up. And then also we need to just rethink all of the architecture around it, and how we keep that safe. But yeah, it's kind of much of the same story, similar theme. We haven't heard much from the Ostium team though. Markets are still frozen, and there hasn't been like a proper post-mortem yet. But I guess it's only been about 5 days.
I was gonna say, like, do you want to speculate a little bit? Like, do you think it's over forever for them, or somebody steps in maybe? I don't know.
I mean, I don't know. Like using Drift and Kelp DAO is kind of precedence. Like they both made it to the other side.
Yeah.
Drift, I think, took on a pretty big loan to make it happen with some collaboration from Tether. So I mean, we don't know any like real details yet. They haven't had a post-mortem or anything like that, but I would bank it on them making it to the other side one way or another.
They've done all right in terms of, you know, they have some like real revenue and some solid traction, and 18 million is a lot of money obviously, but in the scope of things, I mean, what Drift was, you know, upwards of 200 million. So, you know, this is something that can be recovered from. You know, Hype and Lighter, you saw like the impact though. It definitely like raised into the back of everyone's heads, like, oh no, like what if this happens for something like a Hyperliquid? And it was happening during the Hyperliquid conference. So I think
exactly. I expected them to talk about it at the conference. Like nobody.
We don't talk about mention it.
Yeah, literally. I mean, it made sense to talk about like, you know, like network security and everything, and no mention.
All right.
What did Jihan say? Please, no more news, or CZ, please, no more news like this for the sake of your industry.
For the sake of our industry. Yeah, exactly. All right. Well, let's get into our topics. First off, let's just quickly touch on Clarity. We got the big guns in here with Alex. He's been on this beat for so long now, and it's like, please just make it end at some point. You know,
it's been 84 years.
So, Alex, kind of maybe just give us a quick breakdown of where we are and what are we looking for on Clarity at this point? The odds, I think, on Polymarket just trend down.
Yeah, that's the Polymarket there. First time below 40 since like they pulled the bill from Senate markup in January, I think, is the last time it was really this low. Here's where it stands. We need a bill text. We do not have the text of the bill. So the majority leader, John Thune, cannot call a vote until the text is in existence. Yeah. What we have are drafts from the Senate Ag Committee and the Senate Banking Committee, each 2 drafts that were voted on in those committees, passed out of those committees' markup sessions. We do not have a combined version. So at a minimum, those 2 from the committees have to be combined. Now, we also wonder, there's a separate vector. Will they be majority only combination? Meaning, will we get one that includes the Democrats' compromises and such? And will the Democrats admit or call it a bipartisan text? And I think it's pretty unlikely at this point that the text will be, quote, bipartisan. There will need to be bipartisanization of the bill for it to have any chance of passing. But if that doesn't happen in the text, it'll have to happen on the floor as amendments during the floor process, which is likely to need amendments anyway, right? There was going to have to be some amendments. So, but we're still just waiting for that text. And like we were told, there was reporting back like in the first week of July that like they might release the text Saturday, July 4th, or right around then. That didn't happen. Then it was like going to be last week. A lot of reporting saying it was imminent. Senators saying it was 99.99% ready. And yet here we are on Monday, July 20th, and we still don't have the text. Now the Senate goes to recess on August 7th, right? So we have officially, including this week, 3 weeks. 3 weeks of Senate floor time. I don't think the last week is really an option in August. I think they have some other work they've got to do that they're going to before they hit the exits, they've got to work on. So I really think next week is the week for a vote on clarity, which means we need the text like today, tomorrow at the latest. So anyway, that's really just where it stands. I think part of the reason the odds on Poly and Kalshi have been drifting lower is because, and I wrote this in June, like the things we're looking for to make us increase our odds, like text, a floor vote scheduled, like some public information about a compromise on the ethics issue or the BRCA/illicit activity issue. We haven't gotten any of those, right? And I've been very clear that like that's what you need to like mark a milestone of progress, and market hasn't gotten anything like that in 6-8 weeks longer. I mean, so that's why you see the drift down. Anyway, yeah, it's just timelines get tricky, and we've had basically no news on what we know to be the outstanding issues to get to 60. So, and Josh Hawley and Rand Paul voted against Genius, and they're likely no votes in the Republican caucus. So you actually need at least 9 Democrats, and that gets you just to 60. Like realistically, you need 12 or 13. And so it's not that easy a vote. Like, I mean, you know what I mean? Like this, it really does have to be substantially bipartisan. We just haven't heard that there is a good, we're sort of hearing from everyone involved, like, we're still working on it, like we're positive, but like we're not tangibly getting the information that I think would make the market more optimistic.
So people, it sounds like the people who are trying to make this happen have not given up, but it's just been, almost sounds like people are fatigued, but we still have that going for us right now.
Yeah. And we got to shout out to everybody in the Senate and House staffs, and the policy, cohort in DC, because this really has been a long time of work. Like many people have been working on this for a long time. There's absolutely fatigue. You're in the summer. You're about to it's hot. You're about to head into. It's been like very hot in DC and New York. You're about to head into the midterms, which is a whole different like whirlwind of stress. Like I think people really would like this to resolve. Like the people have worked long and hard.
Yeah. And what are the views, I guess, on the market impact, right? Like you mentioned a little bit about ETH being a beneficiary from this, but if it doesn't happen, is it as asymmetric to the downside?
No, I don't think it is. That's a good question. And I haven't been vocal enough about this. I think it's very clear that a successful passage of the Clarity Act is a positive catalyst for Bitcoin, ETH, for crypto markets, potentially an explosive one, I think, actually, because that's super tangible. You see the votes come in, you see it go to the president's desk, et cetera, right? I think the question has been twofold. What is the immediate market impact of some form of failure? And then also, how much does crypto actually need this? I've got answers to both. I think for the second first, the fundamental downside is much more capped, in my opinion, to the crypto industry than the upside is. And I think that's because, again, codifying clear rules and regulatory jurisdictions in federal statute is very bullish, I think, for long-term longevity of the crypto industry and its integration into traditional capital markets. There's no doubt about that. Very hard to roll back a comprehensive bipartisan federal statute, right? But for the next 2.5 years in this administration, say what you will, and what some, about the White House, but they've appointed very competent and innovation supporting people across the regulatory agencies. So like we're likely to get from the Securities and Exchange Commission, the CFTC, banking regulators, generally supportive, I think through actions through interpretive guidance and exemptive relief and the things that regulators can do. So we already can do pretty much everything right now that is in Clarity, right?
Yeah.
And so the market shouldn't react like on the short-term basis super negatively if we don't get Clarity. It's not that Clarity fails. It's like if you don't get it. To me, I think it should be thought of as more of a longevity and even like cherry on top, but actually the status quo right now from a regulatory standpoint is very positive for crypto. And then, but the other thing in terms of short-term action, the other reason I think it's a little bit capped downside, although I don't know that the market's going to trade it this way.
Yeah, they're going to be rational.
Yeah, I mean, I think you should be, you're more likely for it to fail on a slow burn and fizzle out. It's, I think, one of the worst outcome for the liquid markets now would be a called vote that fails on the floor. But most
makes
people
sense.
have thought historically that the majority leader would not waste the floor time if he doesn't think he's got the votes. And so then maybe there might not be a vote at all. And then the story is more like, well, we haven't done it yet. And so it's sort of like it's like a slow failure, a slow, quiet failure versus an explosive possible upside. And I don't know, again, I don't know if that's even how it will play down. For all we know, there's going to be a vote either way. That's kind of what we've been hearing from DC the last couple of weeks, was actually no, like they are okay with the failed vote because both sides want to be on the record on this. So I don't know, but I think in general, I think it's most likely a positive upside catalyst, potentially an explosive one, while the downside catalyst probably fails in more of like a whimper. And so maybe not as dramatic to the downside if it doesn't get passed.
Yeah. And I mean, I think you can see it in this prediction market, right? Like people are pricing in that it's not going to happen. So as soon as it appears that it might, like people have to totally reshift their expectations versus if they don't think it's going to happen, they don't have to. All right. Well, I mean, we'll continue to follow this very closely, obviously, and hopefully we do get clarity on clarity. That's the worst pun that's been made way too many times. Very soon. But in the interim, let's turn over to Base Chain. Big developments last week on Base Chain. Everyone's favorite layer 2. Basically, Jesse Pollack, who's kind of the head of the Base ecosystem, came out and he was basically like, mea culpa. Like we've had this big push with social experiences, content coins, like tokenize your social posts, tokenize everything, and it just really failed. And they basically said, all right, like we're now going to recommit to focusing on like what the core growth areas for crypto that have shown to work are, trading, payments, and they said AI agents as well, which I think is much more nascent than those other two verticals. And so they're basically, I think, reshifting the focus of Base Chain. This has been something that's kind of been in the works over the past 6 months, but this is like them very vocally coming out and stating that it's the fact. It's also kind of an interesting timing because it comes right after the Robinhood chain launch, where we saw obviously, a lot of enthusiasm and excitement around it because of the meme coin activity pick up there. So I would say for everyone who's a critic of Base, this is probably very validating and they probably feel great about themselves. I think for everyone who's a proponent of Base, though, this is also probably great because you probably are like, all right, thank God they're heading in the right direction. It's almost for me actually kind of similar to the Ethereum situation. But Will, let's go to you first, because I would say you are like, first off, you're the most on chain and you're the one who's in these ecosystems, but second off, you are definitely a Base hater. So what was your response?
Well, that's
to
a
this?
little okay, it's a little strong to say that because obviously I want crypto to win, right? So like any on-chain activity in my mind is like generally good, but at the same time, I do find, Jesse's like online presence very cringe. And I've kind of been like, it's very obvious that, Zora and all this kind of social, these crypto social apps things, like this wasn't the right direction to go in. Like that's not it wasn't hard to see that this would happen, I guess. Especially like with Zora, like if I'm not using the app and all my friends in crypto are not using it, like who is using it, right? Like I don't even know like what the target user is there. And, just, I don't know, with all the creator coins, like Jesse launched his own token, with the ticker Jesse, and, obviously price is down only, right?
You've
Yeah,
got
I mean,
there.
it went up a little bit like these past few days.
But
just
that
because
spike is him saying he's stepping back.
Yep, exactly.
People are bullish on him not working on it.
And actually, Brian Armstrong had a tweet this morning. I don't know if Lucas has a screenshot of that in the slides, but
yeah, I do. Yeah,
he was basically talking about well, it says it right there, right? Like he's basically like, I may not even be aware if there is a coin attached to the content I'm posting. And he's tweeting this because, there was just like this Brian token. I think it was called like Coinbase Man. And so he changes his profile
I got
picture.
all the charts for you today.
Okay, nice. Yeah. But obviously, when you're a meme coin trader, this is one of the most bullish catalysts, is like somebody changing their profile picture to the token you hold. Like it's a big thing with Elon. you know, like Elon changes his profile picture, whatever coin is like his new profile picture, of course that's gonna rip, right? This is not like something that people don't know about. And, you know, he's kind of trying to make it seem like in this tweet he had like no idea this would happen, or like, I don't know.
Yeah.
Point is, like, I think I don't know, just it's like you kind of okay. So I was talking to you about this morning, Lucas. Like, you were talking about how, you know, it's good because they're trying to pursue more like sustainable, you know, ways to drive on-chain activity. We continue talking about this, but meme coins really are a good onboarding mechanism for people into crypto, right? And if you make these tweets talking about how like you don't want any, you know, meme coins on your chain, like, I know that's not exactly what he said, but I would argue that you actually just want to incentivize all on-chain activity, you know?
Yeah.
And these types of things where you make a bunch of traders really angry at you, and you kind of like make everybody annoyed at like your blockchain, or at, you know, your presence on Twitter or whatever, it's never gonna really be good for you. You know, like you kind of
For
just
sure.
want people to make money on your blockchain. Like, that's why people, you know, like crypto in the first place, is because they're trading on a blockchain and potentially they're profitable, you know? And you know, all the replies are hate. Like, every single reply is hate to these tweets. Yeah, I don't know. I mean, I'm being kind of aggressive, but like, I mean, these are just my thoughts. Like,
Yeah.
that's how I feel.
Speak, preach.
I was like, it was crazy because last week, both Brian and Jesse had extremely long and contrite posts about how the social thing didn't work, right? And how like the base has to be better and different. And then after that, the Brian
I know. I know.
like, guys, like, I they're kind of like what they say in poker. They're kind of like on tilt right now a little bit about this.
That's
Is
a good
it
analogy.
right? Like they keep making more mistakes, I think.
Yeah,
and frankly,
reminds me of Polymarket.
yeah, I mean, I think that their long posts, like I think they were well written and they mean well, and they did correctly identify, like, you know, Base's shortcomings versus Hyperliquid, Robinhood, whatever. And so in that sense, I thought it was good, both of their posts. But again, also, like, it's pretty rare that you see like a CEO of a company saying like an entire giant thing we did was totally wrong.
Yeah.
And I have to think that it's based on new competition from Robinhood chain, basically, is what they can't really compete with Hyperliquid. And they've kind of stopped trying, right? They got the USDC thing there with Hype. And then, you know, of course, I think they offer Hype, the token, on their exchange. But it feels like this all started to like unravel for them publicly when Robinhood chain launched. And it feels like that's the core.
Yeah, I mean, I also think there's an element too with apps like FOMO really starting to gain a ton of mind share and adoption on like the social side of it. Because that was like kind of their admission of guilt, is like, we missed the whole like read on what on-chain social stuff meant.
They thought it meant like NFTs
Zach
of tweets,
Picorni
but
shilling social trading.
Yeah, it turned out that
it turns out you just need to make the public trades more public, and my Twitter post doesn't need a market cap. And like that was like their whole thing. So I also think that there's a chance that like, yeah, maybe Robinhood was like kind of like the icing on the cake that was like, all right, like, we actually need to do something. But I think like this whole thing has been bubbling up long before that. Like, people have been criticizing Base App and Zora and all of these apps for what, 2+ years. So I wouldn't
really
necessarily
just
attribute the whole
cringe.
thing to Robinhood.
Yeah, it's like they're so out of touch with the users. You know, like they don't know what people want. Like,
that was what Kobe said.
Yeah, I mean, Kobe, we got the post. Let me put the post up. I mean, Kobe came out and basically said that like they're living in an ivory tower and we're kind of out of touch and we need to shift that. I mean, I do think, first off, we said in our newsletter, like, if there's one like, you know, silver lining out of this, it's that Kobe is now involved, right?
I mean, Kobe might be the least cringe, most tapped in person. So like, to be like, that's what's so interesting about the saga. Like here, I mean, this is a huge win for them. And who thought? I mean, Kobe sold them Echo for, you know what, almost $400 million. Like, also like near the top, like last fall. And like, I think I kind of just assumed that he was merely going to do the one episode of Up Only, which they still haven't done.
Yeah,
Because
we're
remember,
not getting that episode.
Coinbase bought that token to use it. And then other than that, he was sort of right off into the sunset. And now he's in charge of all trading at Coinbase. Like, first of all, he's awesome. So like, it seems like a decent, move here. But also like, that's a serious job.
Yeah, no, it's for sure. I mean, because he's also doing base app, right? So he's not just focused on base. So and Jesse said this in his post, like he might lead the direction of what Coinbase users are doing on chain very much away from base. And it would actually make sense because the areas where base wants to grow are the most competitive verticals right now. And any first mover advantage they've had is completely gone, right? Perps, prediction markets, like it's pretty much non-existent on base right now. Their edge is going to be bringing on their current users on chain and getting them to use those applications and then getting them familiar with being on chain and branching out into other on chain offerings. But it's going to be a huge challenge for them. And especially like I wouldn't be surprised if we see like a Hyperliquid integration at some point. I think that makes sense for them to do. But the only thing I will say in like defense of base is like we shouldn't forget that at one point base was like a massive on-chain ecosystem, and like they did have their Robinhood moment, right? There were times when base was leading in application fees across all chains. Their AI like niche remains very strong. They've done well with the Morpho integration, so there are some wins. They've just done a terrible job of like building on those wins, and instead they focused on like this tokenize everything. I'm not advocating for Jesse to get fired. Like I actually like Jesse, even though a lot of people think he's cringe. Like he's putting himself out there all the time, but like he objectively has failed. So I do feel like until he is kind of out of the picture, people are going to continue to be upset.
I think one other area too that could be really interesting for base, which is complicated, but is tokenized securities, depending on where the innovation exemption, which we're still waiting for the SEC to publish, but I think you could see it in the next month. It's soon. It's probably coming soon. I think rightly they're delaying and sort of publishing it until clarity resolves a bit one way or another. But I think one of the key questions that the market has about what is in that innovation exemption, which is for the secondary trading of stocks on blockchains, is what we understand the exemption to specifically relate to. One of the key questions is, will the exemption allow the security tokens on chain to move between only allow listed wallets or also float more like a stable coin? And interestingly, if it is that an allow list is required, Coinbase has a huge advantage here to launch something like that, because I think anyone that uses the base app can connect their existing Coinbase account to it. And so I think this is just by my understanding of thinking this through, they probably have like a couple 100,000 of basically KYC'd base addresses, right? And so they could launch a tokenized security product that has like the biggest KYC'd on-chain KYC'd, pool of potential users, I think, than anyone. So, but also, the other question, by the way, for that exempt is like, to what extent does it allow for third-party wrappers versus only issuer sponsored? That could also impact them. But I'm just saying they do have an advantage there, I think, in terms of addresses on chain that have performed know your customer onboarding.
Yeah, I mean, where we've seen these, like the best exchange chain success has been Binance Smart Chain or BNB Chain, right? And it's like, what did they do? First, they were a first mover there, but they have a token. So I think there is questions about the base token and if that ever comes into play here. But what they really did was they did a great job of just like making it a core part of like their exchange offering, right? And so it just brought all of their current exchange uses on chain. And then they also, I think, operate in a different regulatory environment. And so it gives them a little bit more flexibility that Coinbase might not have. But ultimately the thesis for a thing like base chain, it's the same as Robinhood chain. It's the DeFi mullet, right? It's you take your existing distribution and you think there's actual advantages to using blockchains and you get your users on chain because of that, right? And so we've yet to see that fully play out, but I'm curious where base chain is a month, 6 months to now, because like they now have kind of like, this is their mulligan, right? And so they have to start delivering. Like there's not really a lot of space for them to fail again here. And it has an impact on Coinbase like the perception of Coinbase, I'm guessing on Coinbase stock. So that it's pretty high stakes for them longer term.
Also, do you guys know people who like actually are using the Base app?
No.
Like, I don't either. I'm wondering who like is using it, you know?
Yeah.
I
I
know more
mean,
Robinhood wallet users
yeah.
than Base
Yeah.
app.
I think what they can take from Robinhood is like this Vlad post, basically, like just embrace whatever wins, right? Like you know, if something's
Exactly.
gaining traction, lean into it. You know, let the wolves emerge within you.
All on-chain activity is good activity.
Yeah.
Well, when you run a chain, exactly.
Yeah.
All right, let's move on. Will, you were at the Hyperliquid Policy Summit last week. Just quickly, like, kind of give us a rundown of what you saw.
Yeah, it was the Hyperliquid Summit hosted by like HL Global at the New York Athletic Club up by Central Park. Very like institutional. You know, there's like a dress code. I had to dress up, which is like, you know, kind of rare for like a crypto event, but you know, I get it because there's a ton of TradFi people there, right? So a bunch of people, you know, we've been talking about for a while how like TradFi is like paying more and more attention to Hyperliquid, right? With like pre-IPO perps, you know, kind of like basically the trading of everything 24/7, you know, all these different assets, perps for everything. HIP4 recently with, you know, outcome markets, which there was an announcement for this morning actually. But I guess the main takeaway is, you know, Multicoin did a good presentation. You know, I would encourage people to read honestly their report. They did like a long Hyperliquid report, but you know, kind of the best mode is like this unified margin. Like traders can go, you know, long Bitcoin, short oil, you know, trade like the next Fed decision with outcome markets, like all through the same like margin account, which,
Yeah.
you know, isn't really possible, you know, on competitors like Polymarket or Kalshi. Like Kalshi has, you know, perps now. But still, it's like if you're a serious trader, you know, Hyperliquid is, you know, but like definitely just the place to be. And then also, I like this term that people were throwing around calling Hyperliquid like a headless exchange, just because they don't have to focus too hard on distribution and, you know, marketing because they, first of all, they have this, you know, cult like community, right? All these different like .hls on Twitter, like hyper profile pics, who are just constantly shilling Hyperliquid. And so the team just focuses on the product. And then builder codes make it so you can have these like beautiful front end apps, right? Like FOMO.
Beautiful.
Yeah, FOMO, good example. You know, I mean, Legend Trade is a good one. Phantom and you know like MetaMask. But basically, with builder codes, these apps can use Hyperliquid for, you know, their order book liquidity, and then they focus on the front end themselves, and you know, user acquisition is essentially outsourced. So
Yeah.
that's also something that, you know, that's honestly one of the coolest things to me is just like the team, you know, like all of these cracked teams in crypto are basically just helping Hyperliquid by routing through Hyperliquid for all their trades. And that's something that's growing. But yeah, I mean, it was cool. A lot of TradFi people there. Hyperdash, really cool product. I was speaking to the team for a while. Yeah, got some super sick merch. I don't know. I mean,
Did
I obviously like Hyperliquid a lot, so I was like grateful to be able to go.
Yeah, I mean, so this morning, it's Monday, they announced that they're gonna, I think, move HIP4 permissionless market creation to testnet. So, you know, right now there's very limited markets in terms of the prediction market side
Yeah,
on Hyperliquid, and they've had some limited traction there, right? Like,
yeah.
fees are minimal, but I think that's also like they're not really charging any fees as a growth kind of strategy. Was there any discussion on kind of the permissionless market side? I mean, Zach, like, you know, like you've talked and written a lot about this, like the Oracle issue here seems like a massive risk for Hyperliquid to enable these permissionless types of markets.
Yeah, I mean, they're still just doing like price up down type markets, right?
Yes,
Yeah,
but they've
like
got this. Yeah, sorry, go ahead.
yeah, no, I mean they just like started with like the most verifiable markets, like the
Yeah, I
price
mean,
of
there's
Bitcoin is the
sports
price
and
of
then like
Bitcoin.
Fed decision, but pretty much, yeah. Right now,
Yeah,
actually, I
like
just checked. There's no sports right now since the World Cup's over.
yeah, but it's still the same principle, like very verifiable. Like Spain won the World Cup. Like you can't really dispute that. And then similar to what they do with like HIP3 markets is they'll just outsource the Oracle risk to the curators. Like, I mean, there's certainly some downstream risk in that, like, if you get a funky curator who resolves a market poorly, maybe it's like a bad reflection on Hyperliquid, but it's not going to be as explicit like it is with
Well,
Polymarket or Kalshi, where it's like, you guys control this thing, like, do something about it. Like, people are definitely going to target the curators more than Hyperliquid itself just being the platform. But that's still like very much
yeah,
so
well,
an open-ended question.
yeah, like I think the validators are basically going to step in as kind of like the guardians for these types of new prediction markets. So I do think they take on a little bit more risk there. And you're going to have to stake, I think, 500K hype. So I
Yeah,
think
that's
that'll be
interesting too,
slashable.
because it was originally going to be 1 mil. I don't know if you
Yeah,
remember, but
yeah.
they cut that in half, I guess. It's now it's the same as HIP3. Like that's the same amount of hype, but I don't know.
Yeah. So I think like the big risk for what Hyperliquid going forward now is, I mean, they've got it. The product they've got locked down. It's the regulatory side, and they were in DC meeting with the SEC two weeks ago now. Is that? And then I think the security side, which we talked about Ostium, but I think that's like everyone's top choice for like what like the biggest crypto meltdown. What could cause a big crypto meltdown? Would it be any sort of hack or exploit there? All right, cool. Thanks for the update, Will. I'm glad you had a good time. Glad you got to go out and have a good time while we're in the office, just doing our work.
He did have to go to Midtown, so like that was a negative.
And this
And you had
dude,
to
that
dress up.
was one of the worst days of the smoke. So I was in like Midtown, breathing in this smoke air.
Awful.
All right, let's just quickly wrap up with our final topic. Alex, we talked a little bit about BIP 110 last week, but you are like the Bitcoin guru, and so we wanted to get your take on kind of what are you thinking here? What's at stake? I know you mentioned Michael Saylor published like a 110 reasons why not to do BIP 10.
Yeah, so BIP 110 is self-styled as a temporary soft fork to temporarily limit arbitrary data in Bitcoin. It would roll back. It would introduce caps on certain ways of doing arbitrary data. Let me just put it that way. I think the issue with this, so no one outside of like Bitcoin Twitter really. I mean, now that Saylor has posted and he's got millions of followers, maybe it's becoming more widely known. But like I've even polled our counterparties and trading clients, and like nobody knows or cares about this. So I think at a high level, this is probably likely to fail. But come like late August, there will be that will be the end of the signaling period and the mandatory activation of this proposal on the network. And I think it's very likely to lack sufficient support, to actually be upgraded on Bitcoin. So there's a very real possibility of a chain split, a minority fork emerging, like BIP 110 coin, if they don't, withdraw the proposal, basically. And I would say, I'm publicly very opposed to BIP 110, but we're going to write something a bit more thoughtful than just that, I think, over the next coming weeks to give a little bit more context here. But this needs they've designed it as only 55% miner signaling to activate, which is incredibly low for Bitcoin. Typically things need 95% or more. And I have a problem both with the concept of the BIP, but also its actual construction. So the concept is, I think, stupid because you can always put arbitrary data in any decentralized system. There is no way to stop that. And this doesn't stop all of it. And it then turns the upgrade process into an attempt at whack-a-mole. And that is just not a healthy thing for the Bitcoin community to be spending its time on, constantly going around trying to zero out new ways that people come up with to put data on the blockchain. Separately, the best way to price out spam is to use the blockchain, right? I mean, the reason that Bitcoin uses proof of work is to make it costly to add blocks. And the reason that there's a fee market is to make it costly to add transactions. No one's using the chain. It's like historic low fees on Bitcoin. All you have to do is price out the spam with fees. As I like to say, the fee is the filter. So conceptually, I have a problem with the BIP, but also this thing ain't ready for prime time. Even if we agreed with it, like this is a dangerous piece of software that was already found to have a consensus bug in itself just over the weekend.
Really?
So like, yeah, this thing is kind of a dumpster fire. But I was happy to see Michael Saylor come out with a lot of content explaining why they're opposed to it. And so I think he's by far the most prominent person now that is publicly opposed to it. You can go, there's a cool website, consensus.health, where you can see Bitcoin Twitter personalities who have publicly, they've themselves chosen to signal their support or opposition to the BIP, like through that website. And so it shows you a cool bubble map. It's pretty interesting. And I would say one more development last week, Foundry USA, which I think is the world's largest Bitcoin mining pool, sent an email to its mining clients. There you go. Asking them how they would like Foundry to vote. And you can see Saylor right there in the middle with his golden laser eyes. You can also see me over there on the middle left there with my orange background as opposed. So this is just like, in some ways, like Bitcoiners like just never fail to like come up with some schism to create within the community to fight over. Like very few people, including me, like want Bitcoin to be widely used for like JPEGs or like, we all deeply believe in Bitcoin's use as a hard money, like monetary instrument, like itself has already won. It is digital gold. It is absolutely like found product market fit with that. We don't like want to jeopardize that. I don't think, there's this straw man that the BIP 110 advocates make that like, anyone who opposes it wants like a million L2s posting their roll-up proofs on Bitcoin or like, JPEGs to be allowed and whatever. Like, it's just not true. But like, the problem is it's just such a wrong-headed approach to both to Bitcoin governance, but also to the actual attempt at disincentivizing arbitrary data, right? Like, it's just not possible. And also the thing they've been reacting to, the expansion of the op return field for relay rules, not consensus, by Bitcoin Core. It's because the op return field is the least harmful place to put data like that. So it's actually like the change being made, that was made to Bitcoin Core against software, not the actual protocol law. It was to try to mitigate spam by shepherding it into the least damaging location, right? So I don't know, the two sides are talking past each other, but I'm very confident that this will fail, but I also think it should fail.
Sounds like Bitcoin's having a little bit of a base chain moment right here.
Honestly, though, like this is par for the course. Bitcoiners love to fight internecine battles against each other, purity tests, and fights over what it means to be a Bitcoiner. Are a tale as old as time.
What is the biggest risk that comes out of this? That the fork happens and gets majority support and it's a bad upgrade?
I think the biggest risk is that it does enact on mainstream Bitcoin, and then you show that like a couple ragtag people with no substantial technical support can activate an upgrade on Bitcoin with only 55%. I think that's incredibly bearish if it actually happens. The whole point is that Bitcoin's supposed to be very hard to change, not like a possibly vibe coded upgrade proposal with almost no hash rate support. Now it has like 1% hash rate support, but like even 55 is way too low to alter Bitcoin.
I saw that was at 55, and normally it's higher, it's 90, but how can they change it to just be 55?
Well, it's what they're setting their rules to enact. Like that's why it's not like imposing that threshold on us or anyone else. It's they're going to go through with it as if it has consensus when it has 55. Right? Like they're not trying to get full consensus. That's why the likelihood, unless they back down, the likelihood is very high there'll be a chain split. Like then they will end up forking themselves off the network. Look, no major exchange, no major miner, no major wallet, no major holder, like public holder has come out in favor of this. So if they fork off, I mean, that's a pretty likely scenario. And like most of us who oppose it are pretty sanguine about it. Like let them go. It's not like we're talking about, big giant players that might fork off, right? So it shouldn't be too bad if they fork off. I mean, remember back in the day, there used to be like dozens and dozens of Bitcoin forks. Like it's not that big of a deal. So that's not the worst outcome. I think the worst outcome is somehow that they do force it to be activated and, you actually get a lot of hash rate supporting it. because I think it's a bad piece of software. Like, I'm not opposed to the concept of trying to limit arbitrary data on Bitcoin.
Yeah.
I am opposed to playing whack-a-mole with spammers. I think that's a total waste of time. But it's not like I totally disagree where they're coming. I want it to be used for monetary and store of value purposes and not for JPEGs as well. But I think this is not a good thing.
Yeah, we all know Will disagrees vehemently. All right, let's wrap it up real quick. What are you guys looking at in the week ahead? What's on your minds? Why don't we start with you, Alex, and then Will, and then Zach?
I mean, clarity text. That's the big thing we're waiting for. Like, you show me the bill. John Kennedy, the senator from Louisiana, who's very funny, by the way, he said like plainly to Bloomberg last week, like, there's no bill. Can't be a vote without a bill.
Yeah.
Like, where's the bill? So we're just waiting.
Will?
Yeah, finishing up like my piece on Robinhood Chain's recent launch. I'm actually speaking with somebody on like the Robinhood crypto team later today to get some more information there. We'll be tracking Ostium. I got a few friends on the team, so hoping for the best there. And then yeah, also gonna be building a lot, so writing code like always, creating some software.
Nice. Zach?
Yep. We'll have our lending report coming out in the next handful of weeks here. So just starting to get some of the CFI data through for that. So far, it actually looks relatively positive. But obviously DeFi is just down bad. So we'll see where it ultimately shakes out.
Nice. And I just wrapping up my Solana report, and then I'm doing a deep dive into some of the institutional adoption that we're seeing in crypto and what's driving it, how they're using it, and what the outlook looks like. So look for some exciting stuff there. All right, guys, you're the Firehorse. It continues. Have a good rest of your week.